This is
Welcome to
Contractor
Contractor
Sense with Ruth
Sense. Here
King.
you discover ideas, tactics, news, and information that matters to your contracting business and you. I'm your host, Ruth King. This episode is sponsored by Financially Fit Business. Get the business tool that helps you grow profitably, build wealth, and live the life of your dreams in less than 10 minutes a month. Go to www.financiallyfit.business and get started today. Thank you for joining us. Here is how we will help your business and you. Do you know the difference between a tax credit and a tax deduction? My guest today, Randy Crabtree, has helped thousands of business owners take advantage of tax credits and incentives, some of which have been around for years, and yet most CPAs and others don't know about them. And Randy just got the honor of being, I guess, one of the top 100 CPAs. You can talk about that too, Randy. He's passionate about doing things that matter. He is co-founder of Tri-Merit Tax Professionals in Schaumburg, Illinois. Randy, welcome to Contractor Sense.
Ruth, thank you very much. Thrilled to be here. I'm really excited to talk to you today.
All right. So how did you get this honor of being in the top 100? Come on, let's talk about that first.
You know what? I have so it's top 100 most influential people in accounting. And so supposedly I am an influencer in some way. It's a weird thing to say. But it comes from the standpoint that I love the accounting profession and I love to see it progress and change and be better and be more efficient and be more helpful. All these things that I like to promote and talk about. And I think that me just being out educating on a multitude of subjects is what people saw and why I got recognition. So I'm pretty humbled, but extremely excited that this just recently came out.
Yeah, congratulations. I think that's really, really cool. Not everybody can say that. So I know that you are good at what you do, which is important. So let's talk a little bit about, you are really passionate about accounting. Was it always like that, or was it after the stroke that happened?
Yeah. Oh, go right to the stroke. Here we go.
I
You do
told
your
you I did my
research.
homework.
Yeah. It was really, I've always been passionate. I'm a CPA. I was managing partner of I'll call it generalist CPA firm for a long time, where I would try to help every client, whatever industry they were in. And that felt like work. I enjoyed it, but it was work. About 17 years ago, I sold that practice and I started another, what you mentioned, Tri-Merit specialty firm. And that's where I built a niche practice where we just deal with like a certain service, which is tax credits and incentives. And our firm supports tax professionals around the country. And that's where I started seeing all these really cool things that people are doing. Some firms doing things way more innovative than others. Some firms doing it the Sally method, same as last year, but all have good ideas. And when I saw this and started to just gain all this knowledge of all these different things people were doing in the industry, it just made me really passionate about it, to share what was going on, what I saw happening in this one firm that was unbelievably great, what I saw happening in this other firm that was great, what I saw in this firm that may be lacking. And if we can start sharing this information, maybe we can help them to be better, to avoid burnout, to, not work 80 hours a week. And so the passion came when I started Tri-Merit and built these relationships with CPA firms around the country.
Cool. Very good. So that's there. All right. So let's talk about, there are so many things that most CPAs either don't know about, or do they just not pay attention to it? I mean, because you've said that there are, some tax incentives and tax credits that have been around for years. Why don't they all know about it? Is it their heads in the sand, or is it Sally?
Well, somewhat sadly, it's also somewhat, the tax code is gigantic. You could never read the entire IRS tax code. And so there's just things in there. You cannot be an expert at everything. And unfortunately, sometimes when you're not, you just ignore it because it's not front of mind. And so it's could be a little of everything. It's, CPAs, and I say CPAs generically, tax professionals, EAs, but your tax advisor, they sometimes are are just so overwhelmed with work. There is a shortage of accountants right now. They're so overwhelmed with work. They're so, nose to the grindstone. Let's just pump out. Let's be the reporter rather than the advisor of what's happened. And so they just don't have time to dig into these other things. And so one of my goals is just to be able to go out and educate, at least so they can identify potential opportunities for the client base that they're working on. And it's, I think it's the bottom line is you just can't be an expert. Unfortunately, sometimes our personality as accountants is we just think we know everything. So we don't get a deep look into the things that maybe we don't know.
You know everything. Okay.
Exactly. That's our mindset, I think, unfortunately, which I'm trying to help change that too.
Yeah. I mean, if you don't read the whole tax code, you can't know everything.
You cannot.
Yeah. I mean, it's just really crazy in that. So let's talk a little bit about, because I started the program off about the difference between tax credit and tax deductions, because I'm sure a lot of our listeners don't even know that difference. And I'm not sure their CPAs have actually explained the difference. So would you mind explaining it?
Yeah, sure. And that's a great question because this is one I like to explain because it is a significant difference between the two. So if I have a tax deduction, let's say I have a $100,000 tax deduction. A deduction is going to reduce my taxable income by $100,000. So if my income was $300,000, I have a $100,000 deduction. I'm now going to pay tax on $200,000. Well, the savings is based on whatever tax bracket I'm in. Corporate tax rate's 21%. It's the easy one to use. And so if I have a $100,000 deduction, I save $21,000 in taxes, 21% of that deduction. So that's, nice savings, but it's a deductions, you pay your gas for your company car, you buy paper for the computer. Those are all deductions. A credit, in contrast, is instead of reducing my taxable income, I'm actually going to reduce my tax bill. And so in that same scenario, let's say I had $300,000 of tax due and I have a $100,000 credit, I reduce my tax bill to $200,000. So
That's
that
better.
$100,000, yes, that $100,000 credit just saved me $100,000 in taxes compared to the $21,000 if it was a deduction. So that's hopefully simplifies it. It's just usually not everything can be turned into a credit, obviously, but if there are credit opportunities, it reduces the tax bill, which is the big number we don't want to pay.
Yeah, I agree. All right. Before we take a break, if somebody wants to get in touch with you, how do they do it?
Best bet is really our website, which is trimerit.com. It's tri-merit.com. Or me personally, I seem to be all over LinkedIn. So Randy Crabtree on LinkedIn, you can find me.
Yep, absolutely. Thanks for listening to Contractor Sense. We'll be right back. Imagine you had total freedom. You didn't have to worry about money. You didn't have to be a slave to your business. The words, I can't, are eliminated from your vocabulary. What if you could do what you want to do, whenever you want to do it? A financially fit business could give you that freedom. How? By knowing what your financial statements are telling you and taking action based on what they say. You can do this in less than 10 minutes a month, at an investment of less than taking your family out to dinner once a month. And if your financial statements are a mess, you can get help. Go to www.financiallyfit.business or click on the QR code below to get started today. We're back. Thanks for listening to Contractor Sense. I am talking with Randy Crabtree, who is the co-founder of Tri-Merit Tax Professionals in Schaumburg, Illinois. And before the break, we gave you the difference between tax credits and tax deductions. So I would much prefer to have a tax credit. And I think everybody who's listening would much prefer to have the tax credit. So where do we find them? What are some examples of them? And let's go down that path for a little bit. Can we do that?
Oh, we can definitely do that. And I'm going to have to go speed round here because there's so many opportunities. I'll tell you one first, and then we can see where to go from there. So especially when we're talking, construction, contractor business, a very significant one is called 179D. 179D is an energy efficient commercial building deduction. Now, we just said the difference between credits and deductions. This is a deduction, but for a contractor, it's almost like free money because it's not based on something you spent. It's based on a deduction you get allocated by another entity that you did work for. So it is kind of a credit, but it's really a deduction. And what it is if we're working with any government buildings or any nonprofit owned buildings, and we're doing work on those buildings that is going to make them more energy efficient from a, let's say, a window standpoint, a lighting standpoint, a building envelope, roof insulation, HVAC standpoint. If we're doing anything in one of these government owned or nonprofit owned buildings, and it makes that building more energy efficient. Obviously, there's calculation. I'm not going to go into that.
Yeah. We
can ask that entity to allocate a deduction to us. And so it can be anywhere up to $5 a square foot. So if you're working on a 100,000 square foot building and it qualifies at the max, there's a $500,000 deduction that is not money you spent. It's just a deduction you get allocated. If we do that same math we did at the beginning and use 21%, tax bracket, that's over $100,000 savings that I basically just got because I helped a nonprofit or a government building save money through energy efficiency. So it's free money. It's a really nice deal.
Cool. All right. What's another very popular one?
This is again for contractors, 45L. It's actually another energy incentive. This one is a credit, and it's a credit for developers, again, energy efficient residential property. And so if we have anybody that's developing, let's say a condo building, apartment building, but a new community with 100 homes in it or something, if those homes are, again, math, we won't go into, those homes are considered energy efficient, the developer, the contractor / developer, whoever's, owning the property while it's being constructed, can get up to a $5,000 per unit tax credit. Again, if there's 100 homes and there's 5,000 each, we got $500,000 that we can reduce our income tax bill if we qualified for everything. So 45L is a nice credit out there.
All right. So that's for the developer. But let's say I'm an HVAC contractor or I'm a window contractor or, an electrical contractor working on the building. We don't get the credit, only the developer, correct?
Developer. It's defined as whoever owns the units while they're being constructed.
That sucks for us.
But I know there are developers who actually are contractors as well. So that you might have that combo deal that works out.
Yeah, unfortunately. Well, that's what they ought to do. Then they can't complain about our prices because they're getting all these credits. And so stop complaining.
Oh yeah. Yeah. There's definitely an opportunity there to maybe do some negotiating because of the efficiencies you're putting into a property.
No, I mean, if you think about it, a lot of the HVAC equipment now is very energy efficient. And as a result of it, obviously it's going to save energy and all that sort of fun stuff. So they can't complain about the price if they're the ones getting the tax credit. See, I mean, you're right. We can use this as negotiating and say, look, you don't complain about our price. You're getting a tax credit. You're not even getting a deduction. You're getting a credit based on what we're doing. So sorry.
Yep. I need help here. I think I'll go over another credit then directly to contractors. This is an interesting one, and it's basically a new hire credit. It's called the Work Opportunity Tax Credit, but we call it WOTC. It's easier to say, just the initials. And WOTC is available for basically hiring new individuals that meet a certain demographic definition or geographic location that they are hired in. And it can be anywhere from $2,400 to $9,600 tax credit for each employee that qualifies. And so, a couple of requirements, they have to work at least 120 days. So, it can't be turning somebody over every week and we get another credit. They have to be there a while, but it's an ongoing thing. It's analyzed every time you hire somebody. And if you find an employee that qualifies, you accumulate these credits throughout the year and then use them to offset your income tax at the end of the year. So work opportunity tax credit is very, very useful in industries where there is, maybe higher turnover or you're doing more hiring. And so contractors in general seem to be a good opportunity for that.
Yeah, absolutely. We are always looking for really great people. And I think that's true, though, with any business. We really want to hire really good people who are productive and who will, you know, do their jobs, take care of our customers, and enjoy what they're doing.
Yep.
So, all right, we have time for two more. Give me two more.
Two more. Okay. Well, this one is, I think this is more of you're going to see opportunities because of this credit. It is, and you can be using this on your facilities yourselves or doing work for others, but you won't get the credit for others. But I think what's going to happen is you're going to see a big ramp. I'm really teasing this before I get into it here. You're going to see a big ramp up in construction in certain areas because of this, and it's called renewable energy tax credits. These credits were defined or enhanced about a year and a half ago, and we are at basically the blade on the hockey stick of the implementation of this. We're going to be going up that stick in the next couple of years, where you're going to see every commercial property look to put some kind of renewable energy equipment into their facilities because the tax credits are so high. So anybody that's doing roofing, maybe there's some solar panel opportunities. If there's a manufacturer, that wants to enhance their property, enlarge it, enhance it, there's potential credits for them. So I get excited about this stuff. Around renewable energy tax credits, you're just going to see a significant ramp up in construction in general because the credits are so opportune for anybody that does anything around renewable energy, from manufacturing equipment that goes into renewable energy, from starting to use renewable energy that you produce yourself, solar panels, wind power, geothermal, all this stuff. So I think if you ever want to look for a niche in construction, this niche is going to grow significantly.
Yeah, absolutely. So, Randy, give us your website again one more time, please.
Sure. Try TRI-merit, MERIT.com.
Thank you so much for being with us and sharing your passionate knowledge.
Well, thank you for having me. I really had a good time, and it was fun.
Well, good. I'm glad. And thanks to all of you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a fellow contractor make more money too. For comments or questions, call me at 770-729-0258 or email Ruth King at hvacchannel.tv. Thanks for listening. Have a great and profitable day.